MicroStrategy's strategy of using treasuries, corporate cash reserves, to buy Bitcoin is something large corporations do by reallocating their cash or issuing debt. While individuals don't have corporate treasuries or shares to sell, there are still ways to use personal finances in a similar manner. Here's how you can think about using personal treasuries to buy Bitcoin. 1. Understanding the concept of treasuries for individuals. In the person, treasuries could refer to your cash savings, your liquid assets that are easily accessible, such as money and savings accounts, emergency funds, or low-risk investments like CDs, certificates of deposit. Investments in low-yield assets. Any investments that aren't generating significant returns. For example, bonds, savings accounts with low interest rates, or underperforming stocks. The idea is to take a portion of this relatively safe capital and allocate it to Bitcoin for potential growth, just like MicroStrategy did with their corporate cash reserves. 2. Using debt or borrowing for Bitcoin purchases. MicroStrategy famously raised debt through bonds to buy Bitcoin. While individuals don't issue bonds, you can borrow money at low interest rates to do something similar. However, this is a high-risk strategy and not for everyone. Home equity loans. If you own a home, you might be able to take out a home equity loan or line of credit, HELOC, at a low interest rate, then use a portion of that to buy Bitcoin. This essentially allows you to use the value of your home as leverage. Personal loans. You could apply for a low-interest personal loan to buy Bitcoin, although this can be risky due to Bitcoin's volatility. Credit cards. Some people use credit cards that allow cash advances or offer 0% introductory APR periods for Bitcoin purchases. But this is risky and only advisable if you are confident you can pay off the balance before interest kicks in. Caution. Using borrowed money, leverage, to buy Bitcoin is very risky. If the price drops significantly, you could be stuck with debt payments and lower value Bitcoin. Only consider this if you fully understand the risks. 3. Reallocating existing investments. If you're holding cash or investments in other assets like bonds, you can reallocate a portion of this personal treasury into Bitcoin. Sell underperforming assets. Look at your portfolio. Are there investments that aren't performing well or have low growth prospects? For example, some people move from bonds with low yields or stocks they're less confident in into Bitcoin, which has a higher potential for appreciation. Or savings reallocation. Instead of keeping a large portion of your assets in savings accounts with low returns, which are eroded by inflation, you could allocate a portion to Bitcoin as a long-term store of value. Ensure you still maintain an emergency fund in cash. Key considerations. Keep a portion of your assets in cash for liquidity. An emergency fund, usually 3-6 months of living expenses. Use only money you can afford to lose when allocating funds to Bitcoin, as it's a volatile asset. 4. Dollar cost averaging with monthly income. If you're receiving a steady paycheck, consider dollar cost averaging, DCA, as a strategy to invest your income like MicroStrategy did with its treasury. DCA example. Set aside a fixed amount of money from each paycheck, for example 5% of your monthly income, to buy Bitcoin. This allows you to spread your purchases over time and reduces the risk of making a large, one-time purchase at a market peak. This method mirrors MicroStrategy's long-term outlook, which involves continuously acquiring Bitcoin over time, regardless of short-term price fluctuations. 5. Selling assets for Bitcoin. For people who own property or significant assets, selling a portion of them to acquire Bitcoin could be a consideration. Real estate. If you own a secondary property or vacation home, you might consider selling it and using the proceeds to buy Bitcoin. Stock portfolio. You could reallocate some of your stock holdings to Bitcoin if you believe it has higher potential for growth over the long term. 6. Use tax-efficient methods. MicroStrategy is a U.S. company, so its strategy considered the tax implications of holding Bitcoin versus cash. As an individual, you should also consider taxes. Capital gains tax. If you're selling investments, stocks, bonds, real estate, To buy Bitcoin, be aware of potential capital gains taxes. Retirement accounts. If your country allows it, you might be able to buy Bitcoin through a retirement account, such as a self-directed IRA in the US, which can offer tax advantages. This would allow you to hold Bitcoin in a tax-advantaged account until you retire. 7. Securing your Bitcoin. Avoid counterparty risk. When you use your personal treasury to buy Bitcoin, one of the core ideas behind MicroStrategy's strategy is holding the asset directly, not relying on third parties, banks, exchanges, for long-term custody. Cold storage. After purchasing Bitcoin, move it into cold storage, like a hardware wallet, for example, Ledger or Trezor, to minimize the risk of loss through hacking or exchange failure. Summary of steps. 1. Evaluate your personal treasury. Review cash savings, low-yield investments, or underperforming assets you can reallocate to Bitcoin. 2. Consider leverage cautiously. If you want to borrow, like MicroStrategy did, assess your risk tolerance. Only borrow if the interest is low and you're comfortable with the risks. 3. Dollar cost averaging with income. Use part of your monthly income to buy Bitcoin over time. 4. Sell underperforming assets. Reallocate a portion of your existing investments or other assets like real estate or stocks to Bitcoin. 5. Tax-efficient strategies. Keep an eye on taxes and consider tax-advantaged accounts like self-directed IRAs for Bitcoin investments. 6. Hold securely. After buying Bitcoin, transfer it to a cold storage wallet to protect it from hacks or third-party risks. With these steps, you can mirror the essence of MicroStrategy's Bitcoin play, adapting it to your personal financial situation.